If you have income from any type of offshore source, be it interest, dividends, or any other form of income earned offshore, then you may claim a portion of any tax deducted offshore by the foreign country. This is provided that SARS has a double taxation agreement with the foreign country. SARS will, however, limit the amount of your tax claim to what tax would have been deducted had the income been earned in South Africa. This limit is called your Section 6 quat limit, and in its simplest form it works like this. Let's say that you earned 200,000 Rand locally in South Africa and paid no tax on the 200,000 Rand. Let's say you also earned 150,000 Rand foreign interest from an offshore bank account, and let's say that 40,000 Rand equivalent in tax was deducted overseas. How much of that 40,000 Rand tax deducted offshore will SARS allow you to claim as a foreign tax credit? Well, let's have a look at the formulas that SARS uses. In our example, we can see the foreign income of 150,000 Rand earned offshore as foreign interest, for example, and we can see the equivalent of 40,000 Rand in tax deducted overseas. We can also see the 200,000 Rand income earned locally, and zero tax was deducted on that 200,000 Rand. This gives us a total of foreign plus local income of 350,000 Rand. SARS's tax tables show that the tax due on a taxable income of 350,000 Rand would be 78,482. To determine how much of the 40,000 Rand deducted will be allowed as a claim, we simply proportion the tax due on the total by the portion of total income earned offshore. In other words, we use the 150,000 Rand foreign income divided by the total income earned offshore plus the income earned locally as a fraction of the tax due on the total of foreign plus local income. This means 150,000 Rand divided by 350,000 Rand multiplied by 78,482 tax due on the total taxable income of 350,000. SARS says this would mean the 150,000 earned offshore would have attracted tax of 33,635 if the 150,000 would have been earned locally. And so, as per 6 quat, the limit we can claim is 33,635, and we have to forfeit the balance of the 40,000 tax deducted offshore. Note that the amounts for foreign income and for local income in the formula must be taxable income amounts. Let's have a look at a case where the 150,000 Rand earned offshore was by way of dividends from a foreign investment, and that tax of 20,000 Rand was deducted offshore. SARS will only add 20 over 45 of the 150,000 Rand foreign dividends earned as income. The 20 is because dividends of this nature are taxed at 20% at source here in South Africa before you get them, and the top rate of tax in South Africa in the 2018 tax year is 45%. So, although we received 150,000 Rand in foreign dividends, SARS will only add 20 over 45 of that 150,000, or 66,667 Rand, to our income. The 200,000 Rand earned locally plus the 66,667 means the total taxable income of 266,667 Rand. The tax tables tell us that tax on a taxable income of 266,667 would be 54,142 Rand. The proportioned amount of the 54,142 tax that would be levied on the foreign income of 66,667 would be 66,667 over 266,667 multiplied by 54,142, which comes to 13,535. In this example, we would only be allowed to claim 13,535 as taxes paid, and we would have to forfeit the balance of 20,000 Rand actually deducted offshore. 6 Quat is a bit more complex in that we have to use taxable income amounts for local and foreign income in the formula. If 30% of our total income happen to be from foreign income, then 30% of allowable retirement fund contributions and allowable donations to certain institutions can be considered as a deduction against foreign income in order to determine taxable foreign income. And 70% of these allowable deductions can be used to determine taxable local income in these calculations. I have used simple examples to illustrate how 6 Quat works. It can get more complicated in cases where a taxpayer also has income from foreign capital gains, but fortunately we have tax software calculators available in South Africa that will factor in all these various income and allowable deduction amounts and do all the most complex 6 Quat income tax calculations for us.